Hi everyone, myself Dr.S.DHIVYA, Assistant Professor, Department of Commerce and Computer Application in Dr.S.DHIVYA College of Arts and Science, Autonomous. In this lecture video, we are having a topic of hire purchase and installment system. Actually, any idea about hire purchase? Yes, hire purchase is we use the term hire purchase in a high value of the product, because for example, for the middle class or the lower class people, they could not buy the high value of the product with the single payment. So that time they will have a term of hire purchase system. Suppose in the even in our home itself we have electronic items like television or fridge or whatever it may be, even the iPhone, we could not pay in a single payment and we get the product on that. So at that time we have a hire purchase system for 2 years or 3 years or 1 year. We have every month installment will pay the amount. But before that, when we pay the down payment, that time itself we will collect the product. That is called the hire purchase installment. Now we are going to see how to calculate the hire purchase value, because the product value we can say is 1 lakh, but the installment amount we pay around 1,50,000. That means it includes interest also. So how we have to calculate? Now we are going to see the sum on that. On 186, the purchase is mission of hire purchase. The payment 4,000 is paid in the down payment, and then 4,000 annually is paid for 3 years, and the cash price of the product is 14,900, and the rate of interest is 5%. So when the question is given all these items, because when we calculate how the interest they have paid and how the principal cash price they have paid, we need down payment amount, how many years they are paying annual installment, and cash price of the product and the rate of interest. When we have all these, we will see how to calculate. First one, we have a particular column, and so we have to find out like this particular column: total cash price, installment price, and interest rate. We can say 1, 2, 3, 4. So we have a minus of 2 and 3. We get the answer cash price column. First we will see how much the cash price of the product. How much the cash price? 14,900. Okay. So the value of the product is 14,900. That time they are paying the down payment. When they are signing the agreement, they are paying 4,000. So they are paying the down payment 4,000. So installment, they are paid first the installment amount they are paid 4,000. Interest not paid. Cash price is nothing but the original value of the product, not the interest involved included. So 14,900 minus 4,000, 10,900. So after down payment, the next year comes, they are paying 4,000 annually. So first they are paying 4,000. The installment amount they paid is 4,000. We have to separate the amount, how much the cash price and how much the interest price. Okay. So tell me, 4,000 into 5 divided by 100, the value is 545. So this is the interest amount they have paid for the first year. So 4,000 totally they paid as an installment. 545 is the interest amount. So the remaining is 3,455 is the principal amount for the product. Okay. I will understand this clearly. 4,000 they have paid. 545 is the interest amount. 3,455 is the installment amount for the cash price. So remaining how much they have to pay? 7,445. So here they have paid cash price 3,455. Already I told you cash price is nothing but this amount. How much we are paying annually. So in the second, this is the first installment they have paid. So annually they are paying for 3 years. So second installment, how much they have paid? Again they are paying 4,000. Whether we have to write 4,000 10,900. For 10,900 we have find out that 545. So here 7,445 into 5 divided by 100. How much they have to pay? 182.75 they have paid as an interest. So what is the cash amount they have paid? 3,627.5 they have paid as the cash price. Is it clear? See, we have found out the installment amount 4,000, but the value for the pending amount, right, 10,900, we have to find out the rate of interest, and 7,445 we have to find the rate of interest, right? So here the cash price they have paid is 3,627. Interest is 182. Principal amount is 3,627. When we add both, we get the answer 4,000. And the last year, how much they are paying as an installment amount? Again, they are paying is 4,000. See, we need 3,627. But the installment amount they are paying is 4,000. So the last year, what the companies or what the corporate will do is, first they amount they have to pay 3,817.50. This is the amount they have to pay. So what finally the company will do is, they will not just find the interest. Out of that, they will took the installment amount from the principal, and the remaining amount is 4,000 minus 3,870 will get 182.75. That means 182.75. So here the principal amount they have paid fully. Installment amount, see, down payment 4,000, 3 years. Here we got the installment amount. The interest is 182, 372, 540. And finally they have paid 2,081. When you calculate all this, we will get the answer 14,900. When you find the total, we will get 16,000. So remaining is the total of 1,100 is the interest for the payment they have paid. This is the way we have to find out the amount. Any doubt? Is it clear? Okay, thank you.